Let's bring in Santosh Rao from Manhattan Venture Partners to talk more about this. He was an early investor in Lyft. Santosh, great to see you today. What about some of these issues of trying to contrast Didi along with Uber and Lyft? When Uber and Lyft came public, everyone was mostly focused on the big picture opportunities. Now there's a lot more scrutiny of the specifics of the business model. How does Didi stack up at this point based on what we know?
Yeah, unfortunately for Didi, they're coming at the wrong time. I mean, there were rumors that they might come out before Lyft at that time in 2018 or 19, whenever that happened. But I think there was no comp at that time. So the price discovery was much difficult. So they got the benefit of doubt, Uber and Lyft did. But I think Didi will go through the scrutiny. They have so many issues to sort out, and their valuation is going to reflect that. It's going to be moderated because of that. There are a lot of issues, regulatory issues and all that. But at the end of the day, setting that aside, it is the biggest one in the biggest market. So you can't deny that. And if you want to participate in another big cap pure play in China, this is a great opportunity, but you really have to be careful. Don't expect the upside that you got with Uber and Lyft in the beginning. Of course, they pulled back after their IPO, but now they are on their own. So people have seen what works, what doesn't work, what they need to sort out. I think so they have time so they can correct the mistakes that the other two made.
But does Didi enjoy any advantages in terms of the economics of their business because they so dominate the market over there, whether it's, how much they have to subsidize rides or anything else that might make them a little bit better positioned and actually scale more efficiently than Uber and Lyft do?
Yeah, I think they do because they pretty much control the market. They just have to be careful with the regulators in terms of any monopolistic behavior. But other than that, I think they drive the market. So they have all the benefits. They're going into adjacent markets. Plus, they are in 14 countries. So you have the optionality of being a global player, investing in a global player. They also have a stake in Ola in India, which is a big market also. So they are essentially in every major ride-hailing company. So you get the scale. They will capture that scale down the road once they sort out the near-term hurdles, the regulatory and all the other issues. But if they can show a path to profitability, which they appear to be showing, this quarter was good, I think they're on a good trajectory going forward.
And Santosh, that was exactly my next question, was that path to profitability, because I believe they did post a profit, at least in the first quarter. Do you believe that that's sustainable, or was that a bit of an anomaly?
No, I think this was an anomaly. It was more driven by an investment income, from what I read from the F1. It'll take a while. The number they reported is the gross number. So assuming a 20% take rate, which is what Uber and Lyft have, majority of their take rate is 20%. Some of it is 25%, but let's take 20%. So they really had revenues of $4 billion, and that reflects the unit economics of China. And US has the best unit economics, even though they have less total users. Their revenue is a lot less than Uber because US is the highest, like I said, in unit economics. But I think they have a path to profitability. They can show it. They need to control that, and they'll do it. I think they have more time than the others. They don't have any competition at this point, so they just have to carefully, methodically show that they can reach there.
Shepard Smith here. Thanks for watching CNBC on YouTube.